Last Friday's brutal stock market sell off, driven by uncertainty around tariffs, fears of a slowing economy, and perhaps news that Warren Buffett, the world's most famous investor, well, he's selling stocks and piling up cash. Now, all of this has many investors wondering, should we be selling too? Hi, I'm Lou Reyes, and on Over 50 TV, I bring you retirement tips and Social Security news, plus insights to help you protect your financial future. And today I'm going to break down why Warren Buffett is piling up cash, what it signals for the market, and what it could mean for your investments. If you're an older worker or a retiree and you're concerned about your portfolio, well, you're going to want to subscribe to Over 50 TV. And you're also going to want to stick around because you are going to want to hear this. Warren Buffett's moves in the stock market are watched more closely than just about any other investor. So when his company Berkshire Hathaway, when they start selling off stock and piling up cash, well, people are going to take notice. And for some investors, especially those folks nearing or in retirement, well, it raises a big question. If Buffett isn't buying stocks, should we be? You know, that concern, well, it's been echoed by financial advisors at Edward Jones who have heard their clients ask the same question. Why should we be buying stocks if Warren Buffett's not? It's a fair question. And today what I want to do is break down what's really happening and what it might mean for your portfolio. These days, Warren Buffett, who built his legacy on picking stocks, is increasingly picking cash instead. And Berkshire Hathaway's cash reserves and their treasury bills, well, they've soared past $300 billion, and that's the highest ever recorded in data going back to 1998. And holding cash, well, you know, it's nothing new for Berkshire. But this level of buildup, it's got investors raising their eyebrows and wondering, what's Buffett waiting for? Some might interpret Buffett's moves as a warning sign for the stock market. After all, if he's pulling back, does that mean stocks are overpriced? Should everyday investors follow suit? Well, here's the thing. Buffett isn't making a call on the entire market. He's being selective. The reality is stocks are expensive right now. The S&P 500 recently hit another all-time high, and stock valuations are well above their 10-year average. And Buffett and his team, well, they're known for waiting for a bargain. And in their view, prices aren't where they need to be for Berkshire to jump in. At Berkshire's last annual meeting, Buffett himself said, "We'd love to spend it, but we won't unless we think we're doing something that has very little risk and can make us a lot of money." There are four key reasons that Berkshire isn't stockpiling cash, and I'm going to give you four. Number one, stocks are expensive. Buffett doesn't overpay, and right now he thinks many stocks, well, he thinks they're overpriced. And number two, he's trimming big positions. Berkshire has been selling off a large portion of its Apple stock after years of high gains. And number three, stock buybacks have slowed. Berkshire didn't repurchase any of its own stock last quarter, signaling possibly that even it might be expensive. And number four, he's thinking about succession. Some analysts believe Buffett is simplifying Berkshire's portfolio to give his successor, Greg Abel, a smoother transition. So what does this mean for everyday investors? Well, before I tell you, I want to let you know that the information in this video is for educational purposes only, and it does not constitute financial advice. Please consult with a certified financial planner or a professional advisor before you make any financial decisions. Now, Buffett's cash buildup, what does it mean for you? Well, it does not mean it's time to panic or to sell everything, but it does suggest a few important lessons, and I'm going to tell you about three of them. First, be patient. Buffett is waiting for better buying opportunities, and smart investors know that good deals don't always exist. Second, be selective. You know, not all stocks are created equal, and if Buffett thinks prices are too high, it might be wise to be cautious about what you buy. Number three, stay diversified. You know, Buffett's cash pile, his pile is earning interest. His money isn't just sitting there doing nothing. For individual investors, this could be a reminder to balance your stocks with other assets like bonds or dividends or even some cash reserves. Despite the headlines, Buffett isn't giving up on the market. In fact, he reassured investors in his annual letter, Berkshire shareholders can rest assured that we will forever deploy a substantial majority of their money in equities, mostly American equities. He's not abandoning stocks. He's just waiting for the right pitch to swing at. And for those folks who are worried about their own investments, well, that might be the best takeaway of all. You don't have to chase expensive stocks. Sometimes the smartest move is to wait. Well, there you go. I want to thank you for watching today's video. I really enjoyed sharing this information with you. I did a lot of research for this video, but I've also followed Warren Buffett for years. If you have any comments, got any questions, go ahead and submit them. Make a comment in the comment section. You can send me an email. I'd love to know what you're thinking. Now, you are also invited to sign up for my free breaking news email. My email is really the best way for you to stay informed about the news that matters most to you. I send you essential updates. I send them right to your inbox. I send them as the news happens, and you do get my free breaking news email. Usually it's about once a week, maybe every other week I'll send it to you, so I don't inundate you at all. Now, you can sign up for my free breaking news email just by going to the description box of this video. You'll find a link there. Now, I also want to remind you that the information in this video is for educational purposes only, and it does not constitute financial advice. Please consult with a certified financial planner or a professional, a pro advisor, before you make any financial decisions. Now, if you are inclined, then go ahead and subscribe to Over 50 TV for more retirement tips and Social Security news. And also, I do want to let you know that if you want to earn more money, if you're somebody who's interested in taking charge of your life, then you're going to want to subscribe to Side Hustle Rules. That's my other YouTube channel. On that channel, what I do is I help folks, give you tips and advice on how to go about starting a side hustle or a full-time business. Now, as some of you know, if you follow my channel, you may already know that I'm not only the creator and the host of Over 50 TV and Side Hustle Rules, but I've also spent my entire career building businesses. I built a chain of business-to-business magazines. I built that from scratch. I launched a weekly newspaper, 2 national trade show companies, a weekly radio program, and almost a dozen other businesses. And a few of my businesses generated millions of dollars a year in sales. So subscribe to my Side Hustle Rules channel if you want to learn how to take charge of your life by building the business of your dreams. Well, as I said, that's all I've got for you. And as I always say, have a great day, everybody.